Hi, and good morning or good afternoon. I'm Giovanni Betancourt, an educator and trader with Vantage Markets, and this is the market analysis for today, July 15th, 2022. Well, let's begin. Market expectations for the Federal Reserve's next move on July 27th looks schizophrenic. After inflation touched a fresh 41-year high on Wednesday, traders were quick to reprice from a 0.75 point increase to a full 1 percentage point. The case for a bigger step was clear. The consumer price index data gave Chair Jerome Powell a reason to move rates up faster, perhaps giving the Fed just that little bit more credibility. A day later, however, and sentiment had swung back toward a three-quarter point move again. Futures contract implied the probability of a 1 point increase at less than 50% from as high as 80% earlier in the week. One thing to note is that for all of the sound and fury, long-term rate expectations didn't budge after the inflation numbers. While short-dated bill yields soared, longer-term yields actually fell, resulting in the biggest inversion between the 2 years and 10 years since 2000. That is because both higher interest rates and faster inflation lead to a weaker economy. Deutsche Bank pointed out on Thursday that futures markets indicated 100% odds that the US will fall into recession at the end of the year, compared with the end of 2024 previously. JP Morgan Chase CEO Jamie Dimon sounded the alarm on recession again on Thursday. The bank froze share buybacks to brace for the economic hurricane coming. And if traders needed any more guidance, Fed Governor Christopher Waller came out and said that markets were getting ahead of themselves. St. Louis Fed President James Bullard said he's also still behind a 0.75 point increase this month. In short, while the Fed is still in hike mode, it also needs to show that it is steady and won't panic. That is important to keep in mind when the question of how fast rates go up it is already starting to seem less interesting than when they start coming down again. So with that in note, let's take a look at what's happening in the markets after the open. We're 45 minutes into the open, and we have seen that the S&P had a nice pop to the upside, coming towards the 12,000 marking, creating a psychological resistance. It was shy of it, it retraced, and right now is looking to continue that retracement. And perhaps we could see for the remainder of the day a lateral movement, a consolidation stage. If that's the case, we could probably see just this same kind of movement that we're seeing right here being done today around the 12,000, below 12,000, above 11,900, up to be a wider range from our resistance of 12,550 down to our pivot, which is 11,820. So this is a channel created for today, and perhaps this is what the market will be doing, just fluctuating between these levels. The same applies for the S&P 500, which right now is trading above our pivot, which is will act as a support once the market is above it. And we have a pretty high resistance of 3,900, but to speak more clearly, something more feasible, 3,860 will be a level to consider as resistance. The same applies as the Nasdaq. Perhaps we will see a movement, a consolidation stage between 3,860 and above 3,820. Okay. Now let's take a look at the Dow. The Dow has made some parabolic movements, strong move to the upside, getting closer to our resistance of 31,300. Our pivot has been surpassed. So let's update that and use this doji as a point of reference for our pivot, which right now will be acting as a support. Let's update our support to 30,700 on the Dow. Okay, around there. And today in the Dow, perhaps we have those nice long green candles, and we'll have enough momentum behind them to perhaps come up to 31,200 and find that resistance, and perhaps come and look towards our 31,300. So keep that in mind. Stay posted for that. All right, so let's talk about crude oil. We know that Mr. President Biden is already in Saudi Arabia talking to them about probable, working together in regards to things of hiking the production in their zone. So the a consolidation stage right around the $95 mark can be supported. We have our pivot right below that. So a channel can be obviously contemplated of trading below 96 and above 93.60. The $95 mark will be our resistance, and perhaps it will continue to do just that. The same movement that it has been doing so far, coming up to 95.50, and then tracing back down towards our pivot of 93.60. Markets will, I believe they'll be quiet today. Nat Gas, on the same token, we're seeing a nice move to the upside, looking to reach these highs, at least to take out this previous high of what, that's a 6.90, right around that mark. So 6.90 will be our resistance. We have our resistance of 7, which is a psychological level, but we could probably see that later on in the day. If not, also the same movement as this, a lateral movement consolidation stage for the remainder of the day. Gold, all right, gold is looking to break that psychological level of 1,700 as we speak. This 1,680 will be our next support. We have created a death cross between the 50 and the 200 exponential moving average. So that death cross indicates a strong move to the downside, just as we are seeing right here. Now, one thing that could help this movement to the downside would definitely be if the dollar index makes a pop to a 109. Right now is trading right above 108. 108 is being our resistance, our support level on that contract. So let's take a look. So gold, we're looking for 60.80 if we see a good pop on the dollar index. Otherwise, we could probably just linger around the 1700 and create that consolidation stage, ranging stage in gold. And then obviously perhaps next week we'll see a nice breakout. Let's take a look at the euro. Again, consolidation stage, range bounding around the parity level. We could probably see this level hopefully hold. All right, any other movement obviously will be contemplated towards downside. Again, the dollar index will determine very strongly on that. If the dollar index does move to 109 and beyond that to 110, we could probably see obviously a below parity of the euro. So therefore, stay in touch, right? Be ready for some movement in this currency, as well with other ones. All right. So Bitcoin has been trading in a narrow channel below 21,800 and above the 19,000 level. Our pivot is at 20,500, around that amount. Acts as a support when the market is above it, as a resistance when it's below it. Right now, we're seeing a small movement of the moving averages, but I will think that Bitcoin will continue to move around our pivot, just a fluctuation right below it and then right above it, staying in a very tight, narrow space. And then we have obviously the dollar index. 108 is our support. All right, and I was saying, should we see another pop to the upside or 109, we'll see those movements lower on gold and the euro and other currencies as well. But if we see that the dollar index begins to retreat and come back down to 107, then we'll see movements 107, 106.50, 106. We'll see movements to the upside on gold. Gold could probably fluctuate back up to above 1720. 1740 has been a level that the market has really fluctuated a lot, and obviously we'll have the euro come back up to 101 perhaps. So those are the levels for the rest of the day, and this is the market analysis. I'm Giovanni Benacour, and I'll see you next time. Have a nice weekend. Ciao, ciao for now.